if I really look at it from just gross numbers perspective, this year we are going to do about already at about $18 billion of IPO capital raised. By the time I think we are done with this week, there's another $2 billion worth of capital plan to be raised. So I think we'll touch about $20 billion for this year, all-time highs. But more importantly, I think if I really look at what is currently in the pipeline and what we are tracking at our end, next year again could be close to a similar kind of a number, if not higher. So yes, the IPO number or IPO pipeline continues to remain quite robust. Equally, I would say in the perspective of how India has become relevant from global IPO capital raised has also become a very important aspect for investors. So if you think of it, prior to COVID, 2016 to 19 average, the global IPO volumes every year were on an average about $200 billion. India used to be just about a paltry 2%, 2.5% of that number then. Where right now, if you look at that number, and by the way, we've not done $200 billion this year, we've only done about 120, 125. But even if you go back to those averages, India will be about 10% of the global capital IPO volume raised. So a fairly decent number. To me, I think just given the size and how the market has increased, it is a natural trend that I expect to see going up for India as a market to raise more IPOs.
So in some earlier interviews, Abhinav, you had highlighted that India's macroeconomic growth, increasing domestic capital, and political stability were the three key reasons why India was in a unique position to attract foreign capital, attract a lot of IPOs to the market. I want to flip that question around. What are the three risk factors one needs to keep in mind when looking at investing in new listings in India?
I would say, look, from a broader macro perspective, there are two key risks that I see. Right now, we are in a slightly softer growth period over the last 2 quarters. Everyone expects that the growth rate should come back as we get into the second half of the fiscal year, especially as the government spending picks up. I would say that any slowdown, irrespective of the government spending, if it continues for a few more quarters, will have a knock-on effect on earnings estimates and consequently the multiples at which India is currently trading at. IPO volumes are certainly directly a function or highly correlated to where those multiples are. So that's point number one, or rather risk number one, I would keep an eye out on. The second aspect I would also highlight is that as much as we may talk about the domestic capital, and I think that provides a very strong cushion for the market, but we are going to get or track a little bit around the global markets as well, especially US, in my view, to an extent that you see any correction in the US market at any point in time in 2025 or higher volatility. EMs and India in particular won't be very different. The one thing that really drives IPO volumes is always about VIX. Any increase in VIX is going to be detrimental for that period when we are looking to bring IPOs to the market.